Looking for some great long-term investment opportunities? Like being greedy when others are fearful? Want to know my top 5 stocks for August 2022? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal 6-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. Buy the dip. Be greedy when others are fearful. Sage advice, but these quips are easier said than done. In real life, fear tends to take over when volatility cranks way up, and it's difficult to invest when everyone else is freaking out. But being a dividend growth investor like myself makes it a lot easier. One reason why? Price and yield are inversely correlated. All else equal, lower prices result in higher yields. That's more passive dividend income on the same invested dollar. And because I focus on high quality dividend growth stocks, I can sleep well at night knowing that I own shares in some of the best businesses in the world. I don't fear world-class businesses going out of business, and so being able to buy great stocks on sale is fantastic. And while you wait for those stock prices to head higher over time, the dividends continue to flow and grow. Combining this mentality with the strategy of dividend growth investing helped me to go from below broke at age 27 to financially free at 33. By the way, I explain exactly how I achieved financial freedom in just 6 years in my early retirement blueprint. If you're interested, you can download a free copy of my early retirement blueprint using the link in the description of this video. As great as high quality dividend growth stocks are though, you still have to be selective when it comes time to allocate capital. Not every stock is a good buy at every time. Focusing on the very best long-term investment ideas right now is what this video is all about. Today, I want to tell you my top 5 dividend growth stocks for August 2022. Ready? Let's dig in. My first dividend growth stock pick for August 2022 is Aflac Incorporated, stock ticker AFL. Aflac is a US-based supplemental insurance company. Insurance has long been, and still is, one of my very favorite business models. That's largely because of the float, which is the capital that builds up as a result of a time delay between collecting premiums and paying out on claims. This float can produce a lot of profit for an insurance company. Oftentimes, the float is even more profitable for an insurance company than the core insurance operations. If you can run a great insurance business with prudent underwriting and properly manage a large float, you have a pathway to tremendous success. While Aflac's revenue has basically gone nowhere over the last decade, earnings per share has compounded at an annual rate of 8.6%. Great profit growth has, unsurprisingly, led to great dividend growth. Aflac has increased its dividend for 40 consecutive years, easily qualifying it for its status as a vaunted dividend aristocrat. The 10-year dividend growth rate is 7.9%, which lines up pretty close to earnings per share growth. With that high single-digit dividend growth, you get a yield of 2.9% on the stock. A near 3% yield combined with the near 8% dividend growth rate, that's very solid in my opinion. And with a payout ratio of just 26.2%, this dividend is highly secure. Great business, great stock, great dividend, great valuation. This business can generate plenty of bottom line and dividend growth even absent any top line growth. That has been mostly due to a combination of margin expansion and share buybacks. Just imagine what they could do with better revenue growth. Meanwhile, the market has been pricing in very low expectations here. The price to book ratio of 1.2 is slightly lower than its own 5-year average of 1.3. The price to earnings ratio of 9.1 is also low, even by Aflac's historical standards. Their 5-year average PE ratio is 9.5. This is a stock that never really commands a high earnings multiple, which has given an investor plenty of time to build a position on the cheap. And building a position would have been a wise thing to do. It's been a great long-term investment. The stock has compounded at nearly 13% annually over the last decade. It's difficult to go wrong when you buy a slice of a great business when it's priced to do very little. Aflac is set up to underpromise and overdeliver here over the next decade. Take a good look at it. My second dividend growth stock pick for August 2022 is Best Buy Go Inc., stock ticker BBY. Best Buy is a North American consumer electronics and appliances retailer. This company really surprised me the first time I looked at it. How does an electronics retailer survive, no, thrive, in an environment where e-commerce has been taking over? Well, they do that by adapting, embracing e-retail, and becoming an omni-channel retailer. Simultaneously, their Renew Blue program, initiated back in 2012, improved the business across the board. Leaning into changes rather than doubling down on tradition has served them well. Revenue has compounded at an annual rate of 2.5% over the last decade, while earnings per share grew at a compound annual growth rate of 25.9%. Another thing surprising about Best Buy, their dividend. Their dividend metrics are better than a lot of more well-known names out there. For example, they've increased their dividend for 19 consecutive years. That's actually a pretty lengthy track record. The 10-year dividend growth rate is 15.8%, which is obviously great, and the stock yields a juicy 4.6%. It's not often that you see a yield this high paired with this kind of double-digit dividend growth rate. Plus, we see that it's a well-covered dividend. The payout ratio is only 40.5% based on midpoint guidance for this fiscal year's adjusted earnings per share. Best Buy is a surprisingly impressive business. Is their stock a Best Buy? Maybe. Nobody can tell you what a stock will do over the next week, month, or year, but what I can tell you about this stock is that it's attractively valued after getting cut nearly in half from its 52-week high. The price-earnings ratio is just 8.5. That compares extremely favorably to its own 5-year average of 15.1. The stock is almost priced for terminal decline in the business, which simply doesn't line up with the reality of the numbers. We put out a video not long ago highlighting the stock, estimating intrinsic value of the business at $105.70 a share. With the stock currently trading around the $77 area, it could very well be a Best Buy. My third dividend growth stock pick for August 2022 is Huntington Ingalls Industries Inc., stock ticker HII. Huntington Ingalls is a major American defense company. Sovereign defense is secular growth. You have built-in demand for sovereign defense products and services based on the inherences of human nature. And because these defense products and services become increasingly complex and expensive over time, you have a natural amount of cost progression layered on top of built-in demand, a powerful 1-2 punch. This is part of why this company has grown its revenue at a compound annual rate of 4% and its earnings per share at a compound annual rate of 18.6% over the last decade. Secular defense growth, secular dividend growth. The company has increased its dividend for 10 consecutive years, which is as long as the track record could possibly be. The company was spun off in 2011. The 5-year dividend growth rate is 17%, fantastic, and you even get a pretty good yield here with the stock offering a 2.3% yield. This dividend also looks very safe to me based on the payout ratio of just 35.4%. This under-the-radar stock really should be on your radar, pun intended. Huntington Ingalls is the only company that manufactures certain products for the US military, such as nuclear-powered aircraft carriers. And with geopolitics currently running hot, this company is unlikely to see orders slow down. Actually, it's the opposite. Their backlog is nearly $50 billion. That's more than 5 times the size of the company's entire market cap. We will have a full analysis and valuation video coming out soon, if it's not out already, on Huntington Ingalls, highlighting what an appealing long-term idea this is for dividend growth investors. In that video, the intrinsic value estimate for the business comes out to $239.63 a share. The stock is currently priced at around $209. Potential 15% undervaluation on a great business benefiting from current world affairs with a $50 billion backlog? I think you could do a lot worse than that. My fourth dividend growth stock pick for August 2022 is Altria Group Inc., stock ticker MO. Altria is one of the world's largest tobacco companies. This is a quote-unquote sin stock. Tobacco is obviously not necessary in any way, totally discretionary. However, a large chunk of our society is discretionary in nature. There's very little about our modern-day lives that equate to simple subsistence and necessity. What's great about this particular business is that it benefits from a spectacular level of pricing power, owed to the fact that it sells an addictive product with inelastic demand. This is why, even with its industry in secular decline, Altria has posted up a 2.1% compound annual growth rate for revenue and a 9.4% compound annual growth rate for earnings per share over the last decade. The reports of Altria's death are greatly exaggerated. We can see that in the dividend. This dividend is definitely not dying. To the contrary, Altria has increased its dividend for 52 consecutive years. The 10-year dividend growth rate is 8.4%, which is solid in and of itself. However, it's especially strong when you see that the stock yields a sky-high 8.2%. You will almost never see a yield this high paired with a dividend growth rate this high. That said, I do think that Altria's dividend growth rate will slow to a low single-digit rate, but that's more than enough when you're getting an 8% plus yield to start off with. And while a yield this high usually indicates an unsustainable dividend, Altria's payout ratio of 74.1% based on this fiscal year's midpoint guidance for adjusted earnings per share indicates that the dividend is fully sustainable. This has long been a cheap stock, but it's even cheaper than usual right now. It makes sense for Altria stock to have low multiples. Tobacco usage is in secular decline. I get it. But Altria remains profitable and it continues to grow, albeit slowly. The thing is, the multiples have compressed below even Altria's low standards. Its price to cash flow ratio, for instance, of 9.5 is well off of its own 5-year average of 14.3. We're putting the finishing touches on a full video on Altria, which will analyze and value the business. This video will show why shares could potentially be worth nearly $48 each. The stock is currently below $44. Decent upside, but the bigger story is that 8% plus yield. For income-oriented dividend growth investors, or even investors just looking to sprinkle in some higher yield in a portfolio, Altria is very interesting here. Take a look at it. My fifth dividend growth stock pick for August 2022 is Starbucks Corporation, stock ticker SBUX. Starbucks is the world's leading retailer of high-quality specialty coffee products. We have a handful of companies in the world where when you say their name, your mind immediately conjures up images of their products. Starbucks is one of those companies. Likewise, when you're in the mood for one of those products, your mind immediately goes right back to the company's name. It's circular, it's mind share. But it's actually even better than that because Starbucks pulls off a neat trick that few other companies have ever been able to manage. They provide both a high quality product and a high quality experience, serving food and beverages in an experiential lounge setting. In a world where companies are trying to successfully provide a product or an experience, Starbucks does both. This is why the company has compounded its revenue at 9.1% annually and its earnings per share at 16.4% annually over the last decade. Impressive business growth has paved the way for impressive dividend growth. Starbucks has increased its dividend for 12 consecutive years with a 10-year dividend growth rate of 20.7%. Gotta love that double-digit dividend growth. And because the stock has been so weak of late, the yield has risen to 2.4%. That's 50 basis points higher than its own 5-year average. With the payout ratio sitting at 52.4%, this strikes me as a safe dividend. As long as Starbucks continues to sling out ever more products at ever higher prices, they should be able to continue slinging out an ever higher dividend. This is one of the world's most renowned businesses, and I think it's undervalued here. Starbucks has the kind of brand recognition that few businesses have ever enjoyed or ever will enjoy. It's a terrific business with excellent long-term prospects. I simply don't see any future in which consumers all over the world no longer desire the cheap luxury that Starbucks offers through its beverages and food served in a relaxing lounge. We're putting together a full analysis and valuation video on the business, a video which should be out soon if it's not already. In that video, we put forth the case as to why the business could be worth slightly over $95 a share. The stock is currently priced at around the $81 mark. I see the potential for plenty of upside while you collect a market-beating dividend that has been growing at a double-digit rate. Tough to dislike any of that. Thanks so much for watching. Hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these top 5 dividend growth stocks for August 2022. Please make sure to subscribe to the channel and ring that notification bell so you don't miss out on new content. Also take a look at the description box below for some important links, including the link to my personal stock portfolio. This six-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It'll allow me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high-quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.